Hi, I'm Alina Jamaluddin from Erama, Malaysia. You're watching Weekly Review on Capital.
Hi, welcome back to the Weekly Review with me, Nora. So moving along, Malaysia Plantation sector is bracing for an all-time high inventory on its fourth quarter for its 2012 fiscal year. I had a chance to talk to Lim of Kenanga Research as he expects the general news flows for the plantation sector in the fourth quarter to be likely unexciting. Why? Let's have a look.
The budget 13 is very people friendly. However, if you look at specific from plantation sector view, there's really nothing much specifically for that because mainly I think the allocation of about 432 million is for replanting. From my view, because we are covering listed companies which are already established and they have already very disciplined in their replanting. And this 432 million is more like to help smallholders because they have very large exposure to only specific one. I mean, smallholders are maybe they have only one plantation land. That's why if they replant it, they will lose the cash flow for about 3 to 4 years. That's why government need to help them to on the replanting. So the summary is that it will help the small holders but very little impact on the listed companies. There's also about 127 million ringgit allocation for the downstream. That will help the listed companies if they want to expand the downstream in Malaysia. But bear in mind that Indonesia downstream margin is significantly higher. So it's quite hard to do a lot about that.
Right. So when Indonesia is currently our tightest competition, how can we challenge Indonesia in terms of that? Maybe adding up to our production or export volume?
In the short term, I think we should leave the market, the demand and supply to operate on its own instead of doing a lot of other things that may disturb the demand supply. So I think for the planters, they may be better off to just concentrate on what they are best by trying to get a better seeds so that they can improve their oil yield and also possibly to manage the cost. Okay, they just like human, it is good to be young. So for oil palm tree also, for the young trees, they usually have quite likely to register year on year higher FFB production. So for TSH and United Malacca, TSH I'm looking at about 12% FFB growth this year. For United Malacca about 19% FFB growth this year. So these are among the highest among the stocks under my coverage, and there are two good. The high FFB growth is good in both bull and bear market. During bull market in CPO price, the higher FFB production will allow them to be more leveraged on CPO prices, meaning since they have higher production, they can sell more at good prices. And their earnings growth will be more than other planters during bull market.
I see.
And during bear market, the higher volume will make them less. Although earnings may decline year on year, earnings will decline less compared to other planters.
So, but the thing is, speaking about bull and bullish market, do you think that Malaysia we are specifically focus on plantation instead, the CPO or palm oil and things like that? Should we divert to other sectors as well instead of just concentrating on plantation?
Plantation has been a good cash flow, but it's a good cash flow business.
So why should we hold on to plantation?
Okay, if you look at oil palm tree economic cycle, the economic cycle is like 25 to 30 years, and the cost of production, it ranged from 1,000 to 1,005 per metric ton. And if you look at the selling price now, even at 2,004 or 2,500, from cash basis, it is still a profitable business.
Right.
So although there may be a need to diversify to other sectors, but overall I think plantation is a good business to invest in the long run. Yeah, consistent with my core, my top 5 now is TSH and United Malacca. So the reasons are like just now I have mentioned, because their FFB prospect is better than other planters. So, but if you are a young investor, make sure you can manage the volatility, because since CPO price is very volatile, it can go as high as 4,000 and decline to the minimum 1,500 to 1,006. So you can see the cycle is very
harsh.
It's very cyclical. So if there's a young investor who wish to invest in plantation, make sure you settle your own cash flow well first, and don't try to speculate with a minimum time frame. Don't try to speculate with time frame below 1 year, because
So what
at least 2 to 3 years, then
2 to
it's
3
still
years.
higher chance to see positive earnings
I see. So back to
because
your
of the cycle. Yeah.
But okay, so back to your research note right now. I mean, you are less concerned about the El Nino right now. So, but what should planters or investors do to defend themselves, just in case if the El Nino turns out to be worse?
Quite honestly, there is nothing much you can do on the weather, but because if El Nino happens, it will be like only 2 to 3 months away if it really hits. So there's nothing much you can do. But for good planters with good planning, they already know that weather is something that cannot be controlled. So La Nina sometimes happen, and then sometimes El Nino. So to be able to be still registering profit no matter El Nino or La Nina, you should be consistently, a good planter should consistently buy more land banks, and so that their overall age profile will remain young, and they can see every year every year there should be FFB growth.
I see. So I should maintain the counters that I want to invest to and ensure that the FFB is consistently higher every year.
I'm talking from plantation. If you are plantation operators,
I see.
Yeah, if you are owners of the company, I think the production, because fourth quarter is seasonally the highest quarter of the production, so the production outpacing export is sort of a normal thing. It's just that export this time has been quite weak, because China economy is like, the growth is slowing down.
Right.
That has affected the demand quite a bit. And also India.
So
India
this
also
is,
the demand is slightly
So
lower.
in China is our main export, one of our main export countries in China.
Yes, for CPO export, China is one of the top buyers.
So what are the countries that currently Malaysia has a strong ties in plantation?
China, India, Bangladesh, US and Europe.
I see. So aren't we maybe affected by the US and Europe economy as well?
We are, okay, palm oil is very much tied to global economy.
Right.
But for the most direct exposure, I think, will be China and India, because the people in these countries consume more palm oil compared to.
So should we maybe do something to cushion this blow? I mean, because the impact of the China economy and also Bangladesh affected our export of plantation or the palm oil. Should we do something to actually cushion this blow?
To cushion the problem of export is below the production. I think one of the things that we can do is to the initiative to expand the downstream is one good thing that we can do, because we can find more use for palm oil to process it into more downstream products. But then we need a lot of new investment and probably research to do more downstream products so that we can consume the production that we produce.
Right. Okay, so one last question before we end our session. Do you think that the plantation sector overall in Malaysia is generally strong, or it is like slowly declining, the performance?
I think plantation companies in general is a good long-term investment, because like I said just now, the cost is about 1,000 to 1,500, depending whether you are an efficient one. So as long as the price stays above 2,000, the company will remain profitable. It's just that whether you are very profitable like last year, or still make profit but at a smaller scale. So in the long term, it's a quite high chances that year in year out, plantation company will still make money.
Okay, so maybe the plantation sector should grow at still a double-digit pace next year?
You are saying production or earnings or what?
Productions.
Production.
Still? It will still be in a increase or generally incline pace?
I think, okay, because the CPO production is related to weather also. So assuming no weather disruption, this next year, 2013 production should be higher than this year.
Kenanga Research is maintaining its market perform calls on SIME, IOI Corp, KLK, GenP, and IJMP. Right there, that was Kenanga Researcher Alan Lim giving us insights on Malaysia plantation sector post-budget 2013. Right then, so Weekly Review takes a short breather now. After the break, fear not thy Syria.